Guys, another Peter Lynch reaction video. Peter Lynch is a phenomenal investor. He ran Magellan Fund, I think in full from 78 to 90. Had one of the best track records in history. Brilliant man, owned hundreds of stocks at a time. I love what he said. He had like a 90-second pitch. If you can't convince me in 90 seconds to buy a stock, I don't want to hear it. And that's what I believe. Stocks should not be overanalyzed. If you can't tell me the quick story in 90 seconds, move on. So this is a 2-minute video called The Most Important Thing When Buying Stocks by Peter Lynch. So I have not watched this yet. So we're watching it in real time together. So let's check it out.
I made 10 or 15 times my money in Dunkin' Donuts. Those are the kind of stocks I can understand. If you don't understand it, it doesn't work. This is the single biggest principle. And it bothers me that people are very careful with their money. The public, when they buy a refrigerator, they get a Consumer Reports, they buy a microwave oven, they do that.
Oh my gosh, I got to stop right there. My old saying in my 1800 videos, you'll hear me say it. It blows my mind that people spend hours and hours making Excel sheets when it comes to buying cars. They'll sit there and brag. I said $1,000 this car. Here, I did all the research. I found, okay, what about the stock? Well, it's just a great company. It's going to the moon. It's like, well, wait, what? What are they making revenue? What are they making profit? How much are you paying for that? And it's exactly what he's talking about right here. And he's talking about the most important thing is buying a company you understand. What I mean that is, if you could understand how a company like Dunkin' Donuts makes money. They sell donuts, they sell coffee, they sell pastries, they make money. But then how do people get in trouble? Well, they don't understand how something makes money. Enron. When you don't understand how it's making money, they just make money. If you don't look at their financials, if you looked at Enron in the past, I'm not saying that I saw this, but 20-some years ago, cash flow was here, net income was here. Major red flag, right? So if you don't understand these things, you're going to have a hard time. Recently, a few years ago, a lawyer who I know is very successful and manages money for people, which is absolutely crazy, pitched me real estate having to do with nursing homes. I said, I'm looking at the numbers going, how do these make money? He literally said to me, I have no idea. They just do. And I said, I'm out. Now he's still doing fine because nursing homes, the market has gone up and everything's gone up. So it makes him feel like a genius. He's actually a moron. So anyhow, let's move on.
They ask people what's the best kind of radar range or what kind of car to buy. They do research.
Wow.
On apartments. When they go on a trip to Wyoming, they get the mobile travel guide, or California. When they go to Europe, they get the Michelin travel guide. People will hear a tip on a bus on some stock, and they'll put half their life savings in it before sunset, and they wonder why they lose money in the stock market. And when they lose money, they blame it on the institutions that program trading.
Yep.
That is garbage. They didn't do it.
It's talking about Wall Street is rigged. Listen, I think Wall Street is rigged against the average person because those guys are all salesmen just trying to make their own buck. But they don't blame it on them. You're the one letting them do that. Go learn for yourself. Be smarter than them. It's very easy to be smarter than them. Those guys on Wall Street are salespeople. They're not investment guys. They're not investors. They are salespeople. And there's a lot to be said for salespeople. More power to them. But they're not investors. I've literally met with Harvard MBAs, University of Chicago MBAs, Wharton MBAs. They've sat in my office. I've asked them basic finance questions, and they sit there staring at me blankly. I go, move on, guys. Goldman Sachs, Merrill Lynch, all these guys. I just go, move on, guys. But, of course, we edify these people and say, look how amazing they are. And we sit there and hear a stock tip from them. This is amazing. My worst stock ever was 100% loss in Global Crossing because my sister's boyfriend's father told me to buy it back in 2000. I'm not blaming him for that. I was the idiot. What the hell was I doing listening to this guy? He just said, oh, a friend of mine knows the industry. He says this thing is going to the moon. He didn't say going to the moon, but that's the phrase these days. Guess what? It went to zero. Go look it up. Global Crossing. Let's keep going.
Didn't do any research. They bought a piece of junk. They didn't look at the balance sheet. And that's what you get for it. And that's what we were being driven to. And it's self-fulfilling. The public does terrible investing, and they say they don't have a chance. It's because that's the way they're acting. I'm trying to convince people there is a method. There are reasons for stocks that go up.
There's a method. There's a process. That's what he's saying there. There's a reason why stocks go up. Let me ask you a question. If it's 2022 and you were offered, and your neighbor had a business, they said, hey, my business makes $100,000 a year. They say, I think it's worth $500,000. Let's say somebody comes to you and says, yep, you know what? God comes down and says, Paul, it's worth $500,000. Let's say we fast forward to 2027. You ask your neighbor, hey, how's business? Oh, great. It makes $400,000 a year now. What do you think that company is worth now? My guess is $2 million. And guess what? Probably the case. Now, what we do in stocks is, this is our neighbor. He has a private business. There's no stock market telling him up or down. There's no emotions being done. He just runs his business. His goal is to drive profit. When he drives profit, the value of the company will go up. No different with stocks. The only difference is we have Mr. Market every day based on the emotion of the average person out there saying buy or sell or buy, and the stock goes down in price. How do we know that the market, if this wasn't a publicly traded company, it would have gone from 500,000 to 200,000 at some point just because of a bad, whatever, recession? How do we know the profit here would have gone from 100 down to 70 and then climbed back up to 400,000? Look at your home. We don't know on any given basis. Now there's Zillow and things like that, but there's no placard on top of your house telling you every single day what your house is worth. If there were, you'd probably be selling a lot quicker than most people do. That's the reason why the emotions of the stock market, that's why the process matters. If you believe that if you pay a fair price for the company, a fair multiple based on history for a company, and its profit goes up 4 times, the value of the company is probably going to go up 4 times as well. That's what Peter Lynch is talking about here. Let's keep going. 1 more minute left.
Coca-Cola, this is very magic. It's a very magic number. Easy to remember. Coca-Cola is earning 30 times per share what they did 32 years ago. The stock has gone up 30-fold. Bethlehem Steel is earning less than they did 30 years ago. The stock is half its price of 30 years ago. Stocks are not lottery tickets. There's a company behind every stock. If a company does well, the stock does well. It's not that complicated.
Why are Peter and I trying to disclose the world's secrets? He just literally said it. Coca-Cola makes 32 times more dollars than it did 30 years ago, and it's currently selling for 30 times more. Bethlehem Steel is making less money than 30 years ago. The stock is half. Over long periods of time, that's going to happen if you pay a reasonable price. You go back to Intel, Microsoft, Cisco back in 2000, they're making way more money today, but the stocks are down. Why? Because you would have overpaid back then for what you should have paid for them. That is the big difference. You have to pay a reasonable amount of money for the company today. I wonder if he's going to say that here next. I don't know.
People get too carried away. And first of all, they try and predict the stock market. That is a total waste of time.
Totally.
No one can predict the stock market. They try to predict interest rates. I mean, if anybody would predict interest rates right 3 times in a row, they'd be a billionaire. Considering there's not that many billionaires on the planet, it's very, I had logic, so I had a syllogism and studied these when I was at Boston College. There can't be that many people who can predict interest rates because there'd be lots of billionaires.
All right, guys, watch more of his videos, watch more of our videos. We talk very similar, and yes, it is boring. It's considered boring during booming times, but trust me when I say, what matters more, for you to have fun today or for you to be rich as F in the future? So it's very, very important that you watch 4 or 5 more of my videos. We have 1,800 videos. You got to watch 4 or 5 more. If you do, I 100% guarantee that you'll walk away having a better understanding of money and investing. That's the most important part. There are 3 attributes that make a successful investor: mentality, emotion, and process. We focus on all 3 of those in this company, on this channel. You've got to watch it. You got to subscribe to the channel. I guarantee you that you'll wake up years from now being very happy you did. Thank you very much for your time. There are 3 things that you absolutely need in order to be a successful investor: the proper mindset, the proper emotion, and the proper process. Which ones are the most important?